Well, hi there, everyone, and welcome to the VIP Trade Room with Roger Scott and Matt Horton. Today is Friday, October 17th, and my name is Raleigh White. I'm coming to you live from a beautiful day here in Austin, Texas, and I'm going to be your moderator today. Now, in today's session, Roger is going to be covering a range of important topics, including a review of the market's nasty downside move that we saw yesterday and in the overnights. It's worth a discussion. Secondly, he's going to give us a continued talk about implied volatility. Yesterday's session was very popular, and many people still have questions around that. And Roger would just like to do another review on implied volatility, its importance, and how to pay attention to it. He's also going to share the top stocks and options and might even give us a few tickers to take into the weekend. He's also going to share possible debit and credit spread opportunities, and he wants to answer questions from this week's mailbag. And then, folks, as a special bonus today, we're going to introduce you to Jeffrey Turnmeyer, and he's going to share information about his brand new CashBot program. Extremely exciting program there, and we're glad to have Jeffrey with us today. Now, if you've got any question during Roger's presentation, please type them in the chat window and we'll address them periodically throughout the session so as to not interfere with Roger's presentation. Also, folks, remember that the chat is open to everyone, and remember that we do have some ground rules. Number one, always be kind and supportive in your posts. Secondly, please keep to the topic. No political discussions allowed whatsoever. And folks, keep your side conversations to a bare minimum so the rest of us can focus on the education and information that Roger is sharing. Because after all, folks, he's spending time with us to give us an edge in the market and to help us become more confident and consistent in our trading. Now, for those of you that joined us this morning at 8 p.m. Eastern Time, and I hope that was most, if not all of you, you know that today's catalysts were interesting and significant. And the definition of catalyst, once again, this is information that's either known or will be known during the trading day, but it's not yet priced into the market. And the catalysts today were chips, where we saw that chip stocks or the chip sector, where AMD came in down 1%. On the financial side, we saw that Bank of America and JP Morgan were both down 1% coming into the open, but the big issue here was regional bank concerns, and I'll talk a little bit more about that in a minute. On the mags, we noted that Nvidia and Tesla were down 2%. On the transportation and industrial side, those CSX was up 2% coming into the open. As far as the Fed was concerned, there are some speakers, or at least one speaker today, and we had scheduled housing starts, import-export data, and industrial production information scheduled, but that has all been delayed. No reports there whatsoever, probably largely due to the government shutdown. Now, as far as this morning's small cap watch list is concerned, there were four tickers that Roger mentioned: XRTX, CREV, ARTV, and RANI. And remember, folks, when Roger identifies these opportunities, not only is he looking for price action, but he's looking for extreme pre-market volume. I mean, like 100 times what the normal volume is. Secondly, folks, if you consider taking these trades, wait until the market's open. And if you don't see an entry by 2 p.m. Eastern Time, just forget about it. It's not worth tracing the trade. And also, folks, if you are in one of these trades, never, ever, ever hold those bad boys overnight. Now, let me go ahead and bring up my other chart here, and let's take a look at how these small caps are doing so far today. Okay, so you're looking at my chart here, and you can see that I have 6 panels, and the ones that I'm going to be focusing on are the ones here to the right. So in this panel here, we have XRTX, and we can see that the pre-market high was at $1.77, and the market opened, and we just basically flatlined. Nothing going on here whatsoever. If we look at CREV, same thing. The market high, pre-market high was $8.93. Flatline, nothing there. ARTV, pre-market high was $7.06. Also, the market opened and nothing happened. But then we have RANI, RANI. The pre-market high here was $1.55, and you can see the market opened and it was pretty flat, but right here at about 10:45, 11 o'clock this morning, it took off, and you can see our high is now at $2.39. So easily a 50% appreciation on that. And anybody that had gotten in at this point in time, looking for 25%, maybe as your first profit target, 25% is the second one. You guys are doing pretty good as far as that stock is concerned. So hooray for RANI. But this is what we have seen so far. If you're wondering what's over here, this is the SPY. By the way, everything here is a 15-minute chart. So here's the SPY. We can see that the SPY basically, it's up just a little bit. Okay, it's retraced, come back a little bit here. And then down here are the bonds. TLT are the bonds. And we can see initially they moved lower and they've come up a bit, but that's what's on these charts here. But the star of the day on the small caps is RANI, RANI. Let me come back to my presentation here. All right. And in addition to all that, so not only does Roger share the small caps with us on the large cap stocks, he likes to share what shorts are looking good and what longs are looking good. And on the shorts, we can see that we had what, we had eight tickers, Comcast, CZR, FI, OKE, DV. All of these were looking pretty good. They were looking pretty good. And, once again, none of these were A lines, but they were all setting up pretty nicely. On the longs, we can see that we had several of them here, three, six, we had eight on the long side. Also, all of these looked very attractive, but there was a caveat, and Roger always has a caveat. When he brings each one of these tickers up, you actually see the chart, and he usually has a brief comment. But given what was happening yesterday and overnight, Rogers, just generally speaking, is just concerned about the markets, and he doesn't see at this point in time. He believes it's too risky trading opportunities, if you will, and I'll talk about that a little bit more. But the point here on these shorts is be careful on the shorts. Make sure that if you're looking at a short that has actually been grinding lower and it's not just being impacted by what we saw yesterday. And the same on the longs. Make sure that things aren't overextended and they're setting up, for according to the rules that you have of engagement as to whether you go long and short. But these were the stocks that on his watch list coming into the pre-market. Be interesting to hear what Roger's midday watch list looks like. Now, as far as pre-market comments are concerned, once again, the markets coming into the open were recovering from a sell-off on the bank news, the regional bank news. Not good yesterday on a couple of banks, and the markets basically took a big dive and then have climbed back during the day. This is pre-market. We did note that gold, US dollar, crude, and Bitcoin were all lower, with crude and Bitcoin more significantly than gold and than the US dollar. Once again, coming into the open. He did note that I love this, the sectors remained a defensive mixed bag of nuts. And Roger, he would much rather see speculative stocks at the top of the sector list, meaning those are the things that are going to drive the train. His point was there's no sector firepower. If you're not seeing things going off in tech and financials, there's just not going to be anything to really move the market. And that was his sector analysis. That rotten news on the two regional banks was weighing pretty heavy on the market. And once again, what he shared with us is just the psychology. When something happens with the banks, people freak out, not only individuals, but institutions, etc. So the question was this: is this a dark cloud that's passing? Is this isolated to two regional banks, or could more be involved? As a matter of fact, direct quote from Roger, he said, hey, if a third bank takes it on the chops, we could see the market drop 400 points like that, because that's how people will freak out to it. But once again, at this point in time, it doesn't look like there's any follow through on that. Keep an eye on the regional banking stocks. You use the symbol IAT and KRE as a way to take a look at that. And folks, once again, his parting shot was today is not the day to look for opportunities. As a matter of fact, today is the day to protect yourself. Keep your powder dry. Let's see what kind of confirmation signals we're going to get around all this and then move forward from there. But anyway, fantastic, update. If you're not with us at 8 o'clock in the morning, you really are missing, I think, one of the best pre-market shows in the industry. And Roger holds that every day, and it's free to everybody to attend. Just go to his YouTube channel. So his agenda today, review of the market's nasty downward move. I know he's got additional comments he wants to share. Continued discussion on implied volatility. We had so much good feedback on that from our session yesterday. He's going to share his top stocks and options and maybe some tickers for us to take into the weekend, possible debit and credit spread opportunities. He's going to answer questions from this week's mailbag, and we're going to introduce David Jeffrey Turnmeyer and his new Cashbot program a little bit later in the VIP session, and that's exciting. So once again, with that, folks, thank you so much for coming. Let's say hi to Roger. Roger, my man, how are you doing? Oh, I love your shirt. I love the shirt. There you
Candlesticks is all I care, is all I think about.
There you go. And you
Hey,
reinforced that today. You said, look, guy, no politics, no fundamentals, none of that. I'm a technical analyst.
absolutely.
Okay.
Absolutely. 100%. 100%. Now let's figure things out. Is Matt in today? I know I've been talking to him. I know he's around. There he
Yep.
is.
Yep, I'm
Yeah.
here.
Look at you. Woo,
Hi,
look at
Matt.
you.
Hey,
How are you feeling?
nah, about the same.
Theoretically, he could be on the bathroom throne right now, for all we know, right? I mean, you never know.
Poor guy. That's a lot of
Sorry,
no
I'm messing
fun.
around with you. But how are you doing? Just give us the lowdown.
You, I'm about the same as yesterday. So if you see me disappear for a moment, you know where I am.
Somebody was asking if you're trading the zone today. Are you trading the zone today?
We took one trade already.
I
One
know we
buyer.
are. I'm being sorry. Obviously, I know what you did. And are you using stop losses like you promised me you would?
We sure are.
Posting stops for everybody, behaving yourself, not
Yes,
causing
sir.
trouble. All
We'll
right.
probably honestly be a lot less. Might not have another trade today,
Yeah, well,
to be
let's just
honest.
take a quick look here. I'm going to share the screen. You do what you need to do, and I'll go ahead and share my screen. But I appreciate you coming on, Matt. I know you're not 100%, but he's. Are you still going to be able to unpack everything this weekend and get the office going and be ready by Monday?
Yeah, I'll probably do it Sunday. But
Okay, just keep me posted on that. Let me go ahead and share my screen. Oop, uh, I'm actually sharing the wrong screen. Hold on. For some reason, it shifts. This one becomes one. That one becomes one. I can't be left to my own devices. Okay, now I'm on the right side now. Okay, so just let's put this away. I love my TC 2000.
Mhm.
I really do. Okay, so putting it all away. You guys should be able to see my screen now. Is that correct?
We sure do. We're looking at
And
NVIDIA.
the
let
video.
me just say hello to everybody. Let's say hello to everybody real fast. Hello, everybody. I'm just going to kind of scroll quickly. I see Michael. I see Andrew. I see Jill, Ken, Pink Sparkles. I see a lot of folks. Eduardo, Peter. Good morning, everybody. Kevin, Matt, Jim. Good morning, everybody. Good morning, and good morning. Good morning. I just want to get to the show. I don't mean to be rude or disrespectful. Just want to get on with the show. And everybody on YouTube, greetings and hello and good afternoon. All right, now uh, let's look at the SPY real quick. So interestingly, we went to this level. I wish I drew a level lower, but that was not on my radar. But we stayed at this level pretty good. Most importantly, we didn't go to this level
Mhm.
because notice this morning there was a big area here. And my fear is that we were going to break this level, but we tried 3 times and we couldn't. And by the way, for Matt and those other folks that I talked to on Telegram, this is why one of the reasons why I said that I believe the low is in, because I didn't think we were going to break this level. And I thought if we were going to break these levels, I thought we would break them already.
Mhm.
But
Yeah.
that's not here nor there. This is positive for us right now. Been seeing a lot of volatility. Basically, we opened down at this level, which is why this level was so important. I don't know why I didn't mark the low. Should have marked it a little lower too. I'll just do it right now. I do that. I don't know. Oh, I know why. Because this was that. Okay, I know. I know why. That makes no sense. That was the day before, so that level stays. Okay, fair enough. So here's what I'm talking about. We consolidate. We came down pretty hard. We consolidated. and I noticed market internals started turning positive around here. Now I know it's Monday quarter. It's very easy to talk about market action after the fact, but I did post for Matt about 20 minutes ago. Matt, was it about 20 minutes ago that I thought we made a low?
Yeah.
15 minutes
Yeah.
ago, something like that. 15,
About
20
20,
minutes ago.
25 maybe.
25 minutes ago. Yeah, right here. And I said, I think we made a low, but he didn't pay attention to me. That's okay. It looked like we made a double bottom right here.
I
And I
just
think we're
didn't
going to
like
go.
the hold.
No, that's fine. Plus, it's Friday afternoons. So now, folks, we're in an interesting position right now. You see this area right here, and soon to be right here. So here, the hell. And this is all fresh. This is all live. I'm not like going back or going forward or anything like that. Yeah, it looks very trapped. That's exactly right, Ken. It looks very trapped, and this is why I'm bringing these areas up right now, because we're either going to consolidate at this area right here and chill, or we're going to come right back down. Market internals are like ADD is flatter than a pancake. It's a negative 22 right now.
No.
I mean, when I say flatter than a pancakes, I mean flatter than a pancakes. Vold is making a V bounce. And usually, one thing about the Vold that I've noticed, I like to see the Vold just move the same direction all day long. When I see the Vold doing this, that, that's it. I'm done with it. So I'm not seeing any clarity from. Basically, what that means is I'm not seeing any clarity, any clarity from the Vold. And VIX is moving down. We closed yesterday, or we made a high yesterday of 25. We're at 23, which means we're still in a if we hear some crap about a regional stock, the market's going to go down 4 points area, because the VIX is still like this. Think Clyde, high alert, remember?
How could you
That
forget?
exactly. That's why I showed that pictures. So the market is still doing this, which is why we don't want to go hot and heavy. But over the next over the next couple of hours, or maybe if we break this area, and I have no idea. By the way, it's Friday afternoon. Nobody's stepping on the gas. I'm not seeing any. The tick is at 180 right now, so we're literally in lunchtime. So I'm finding it very hard to believe that we're going to bypass this area, or basically run away with the circus. But I'd love to see it. It would only help our positions. We're long. So
Hmm.
I would love to see nothing more than this come back up to here. Do I think we're going to see it? I don't think so. But hey, stranger things have happened, and it would make me
Stranger
very
things
happy.
have happened, but it is a
And again,
Friday.
but it is a Friday.
Yeah.
So I wouldn't be ruling it out by any stretch of the imagination. Again, I've explained to you why. I've explained to you why I feel this way, and what's making me feel this way. The fact that we already tried to break this level. And remember, as the market progresses during the day, we haven't had any new news. So there's really no catalyst to make this go higher than this area.
Hmm.
Okay. And again, don't nitpick on the exact level, just this area right here, this area. I think everybody understands. Okay. All right. By the way, we took two time spreads based on the data miner in the pit the last 2 days. And guess how we did, Raleigh?
Uh,
Can you make
I
a
know
guess?
how
Can you
you
guess?
did.
You know exactly how I did, didn't?
Yes.
And we all know
Outstanding.
how everybody else did, don't we?
Yes,
By the way,
absolutely.
folks, those time spreads are fantastic, and data miner is the tool that allows us to now like this, literally like this. So,
And as you
and
said, what it would normally take you to find those opportunities would just be exhaustive. I mean,
taking
but
me
you know what, Roger,
hours.
before I overlook something, one of your small caps was the star today, RANI. And several people are chiming in here, thanking you so much for that small cap because they've done quite well with it. It actually went up 54% from the
Nice.
open. And several people jumped in and took multiple positions and scaled out.
Perfect. So, Matt, we gave that one at 155, and it went up all the way to about 240.
239. Yeah,
Not
no,
bad. Not
no,
bad at all. Not
yep.
not not
Nice.
bad.
And
Yeah.
that's
Yeah.
after opening, it moved sideways. It just kind of hung around there for a bit, and then it's like somebody lit the fuse as a bottle rocket.
And
Boom.
that, my friends, is why I give you a very strict set of criteria. Okay. That's why we want stocks that are doing something crazy. We don't want stocks that have high volume. We want to find a small cap that's doing something it's never done before.
Yep.
Because what would make a small cap go up? News of something that it had that's never happened before.
That's right. And as you said, it's not institutions that are driving the
No,
volume,
no,
it's
no, no.
retail investors.
Completely. But when retail investors come in after hours, it's a whole new story. It's very easy to manipulate price pre-open, you know?
Hmm.
It's not hard especially with, I mean, like with this kind of volume. I mean, you're talking about a 50-cent stock. I mean, you know, you don't need to, somebody puts $100,000 into it but boom, it starts to move. So you can manipulate it very easily. Um, that's we don't want to have anything to do with that, by the way, which is one of the reasons we don't want to have anything to do with anybody manipulating it. We don't want to be part of it. We don't want to have any. That's why when you start looking at it after the opening bell, it's much harder to make it run.
Yep.
And and that's why I like to play it that way. So there's no monkey business. There's no like trying to gain an unfair advantage. We're not doing any of that stuff. We're not trying to ride any coattails, but we only want small caps. So you will find now, Raleigh, if you don't mind, and
Yeah.
I don't know if you want to do this or not, but would you mind starting to track? And you don't need to track the winners, losers. I'm not asking you to do that, but can you track if a small cap hits
Yep.
what how often it ends up being basically gives folks an opportunity to profit, or basically just gets people in and suckers you in and gets
Yep.
that's the only thing, because I want to know, like I'm going to ask you, like, hey Raleigh, out of the last 200 stocks that got hit, what percentage of them gave us a good opportunity? And you'll find, at least I find, that most of these small caps will be a nay or a yay or a nay.
That's right.
They don't give us a lot of gray areas. They like,
Mhm.
I'll give you five, one will hit, it'll do really well, or they just don't hit. So I'm trying to find the percentage of the ones that hit that do really, really well. That's all I want. If you
Sure.
guys can, that's all I'm interested in. And I'll ask you like after 100 or
Well, like
200.
this week, for example, Roger, you identified, and I could be off by one or two, but you identified 20 small cap stocks.
At
Three
least.
of them hit, two of them were winners, and one of them wasn't.
There you go. That's exactly
And
what I'm
that's
talking
just
about.
that's just this week. So I can
Yeah,
definitely
yeah,
track that and even go back from that standpoint. Yeah, but
yeah.
nice one today. I just wanted to share that. Not want to take away from the
No,
at
no
all
problem.
from the success of your time spreads, Roger, because once again, holy smoke, the time that you have spent sharing with people how to use data miner and how you like to trade time spreads. And then I think you've had three this week, but certainly two yesterday, and they
Yes.
all did they all did well. Not
Yeah.
surprising at all.
Yeah, folks, if I give you something, it has an edge. Think about this. I would have to be a pretty big loser to be doing the same thing for 31 years if it doesn't have an edge, right? I mean, come on. You got to learn after, maybe 5 years, 10 years, 15 years, you start kind of, getting it. By the way, it looks like we're resisting this area right here, a little tail here. I don't know, we'll see, but volume is falling off right here. There's not much volume here. It just doesn't look like there's much there. Now, if news comes out or whatever, everything's off the table. But so far, I'm pretty happy with what we're seeing here. Now, um, okay, so let me, and I appreciate all of you guys being here. So now let me do this. I asked folks to email me if they had more questions with implied volatility. I don't think I got any emails, or maybe I got one email. So if you guys have a question, a specific question about implied, I got one from Barry and I answered him. If you guys have a question about implied volatility, the first thing I suggest you guys do is watch yesterday's session 2 times, because I go really detailed I go fast, but I go in detail about what I'm looking for and I talk about it repeatedly. Watch that session. Okay. Watch that session. Then send me an email and I will gladly explain to you anything you guys. Sorry, my dogs are barking. I'm just checking to see what's going on here. Um, Send me an email, roger@rogerscott.com, and I'll gladly respond and I'll gladly give you any information that you need and I'll help you out as much as I can. Okay. And I'll guide you to the right place. But implied volatility is super, super, super important. And these time spreads that have like a 90% win rate, guess what we use? Implied volatility. All right. Implied volatility is like a very close friend of mine. Okay. And you don't need to read 600 pages to learn how to use it. You just need to understand. If you can understand blowing up a balloon, you can understand implied volatility. Okay. It's not difficult but you got to put some time in and you got to learn the lingo. And I take it for granted because for me, it's like it's probably my first language at this
It's
point.
second nature to you,
I
Roger.
don't
Yeah.
even think about it. Like if I start thinking about it, I'm going to get confused, you know? No, I'm going to get confused. I don't even want to like analyze what I'm saying. I can just kind of think about it and say it. But my point once again is please rewatch those videos because I repeat every time I go forward, I go two steps forward, but I go one step back every time. And that's how I teach. So try doing that. It'll be very instrumental. And then I will gladly, I'll spend as much time with you. And I also have a bunch of free videos that I'll send your way if you're still confused about it. Okay. But you don't need to learn PhD. No, you don't need any of that stuff to understand, implied volatility. It's really basic. Okay, so I want to go through. Let me just kind of quickly go through the market right now because I know a lot of people are really concerned about the market, and then I want to go through some stocks, and then I want to go through possible debit and credit spreads, and again revisit implied volatility. Okay.
All right.
And also for debit and credit spreads, you need to understand implied volatility because there's a major advantage you could be using for both when you're trading. Okay. By the way, remember I said that price is going to reject this level because of all the reasons I said it. How are we doing so far?
Yeah, exactly what happened.
It's rejecting this area right here.
Mm-hmm.
Folks, not because I have the magic indicator in my pocket. No indicators. My eyes, price levels, and a little common sense.
Mm-hmm.
Don't have to throw all that stuff out the window. Okay. The fancier it gets is not the better it gets. It doesn't work that way. Okay.
Sure.
The
Hey, Raj,
SPY.
I
Yeah.
just want to plant a quick little seed if we can squeeze it in today. Several
Yes.
people are very intrigued about what's going on with gold, and they was wondering if we could get a gold update on that. And they're also interested about some gold stocks, AGI
Yeah,
in particular.
I can't talk about that.
Okay.
I'll gladly talk to you guys about that. Okay, that's right, Hefe. That's very, very true. Let me tell you about
Wow,
gold.
look at gold. Wow. Yep.
That's gold right here, and I hate to say I told you so. But I told you that we're not going to stay in this area very long. This is not normal. It's not healthy. If you want to hear a 10-minute lecture on gold about why we're going to go down, all you have to do is go to this morning's video because I spent 10 minutes this morning explaining to you that gold is overextended, that you're going to get a chance. As a matter of fact, here, let me show you. This may refresh your memory actually. Right here. Now, you see this black line? Let me, oops. Let me go 2 months. Okay, perfect. You see this black line? I drew this black line for you a long time ago.
You
And
bet.
this is what we were talking. This is the same thing we're looking at right here. This just happens to be what we look at every morning, including 3.5 hours ago. And I said to you guys, that I believe we're going to come down to this level. Now, a lot of folks, silver, everything I'm saying about gold applies equally to silver.
Yeah.
Remember, gold and
Precious metals.
silver,
Yep. Yep.
yeah, gold and silver move together. Moreover, gold and silver are, they happen to, think about it like this. Institutions that have gold, don't you think they have funds? And if they have funds, they have both gold and silver. Okay, gold and silver. So whenever a large institution liquidates gold, silver will be with it. Whenever they buy gold, silver, I mean, it moves together. That's the
Mhm.
big reason for the correlation. They're both precious assets. So all you need to do is just focus on one. They move together. Okay. So we need this to come off. Now, based on this trajectory right here, this move right here is not a huge, this is not a big move down. We need to see it break the 8-day. For me to start worrying about gold, gold needs to start coming down below the 8-day EMA. As
Mhm.
long as gold is above the 8-day EMA, this can continue going up, although I seriously doubt it. And even this morning or yesterday I showed you the RSI oscillator and I showed you how overextended this is.
Right.
So in my opinion, gold will come right here, right there. Let me just right there. Right. Maybe if we really want to be like, we could do this too, right there. Hold, let me just change this a
Mhm.
little bit here. Make this come up there. Here. That's it. That's better. That's better right there, which is literally the 15-day EMA, which means gold. All I'm saying is, folks, gold needs to, and I've been saying this for 4 days now, gold or more, gold needs to come down to its 2-week average, which is
Yep.
right here.
Which is not
Now,
a huge correction.
no, not
No.
at all. We're talking about 1 week.
Hmm.
We're talking about a week. Remember here, I started telling you it's overextended. And then for the last 2 days, like this morning and yesterday, I've been going on a tirade. You were there, Raleigh.
Oh,
You heard
yeah.
it this morning. I was I was literally pulling up the RSI oscillator and saying even the stupid oscillator is overextended. Like this thing is really overextended. So what I'm trying to say is this should not be a shock, a surprise, and it doesn't mean we've topped out. And honestly, I can give you 100 reasons why it's happening, and none of them matter because it's happening and it's technically overextended. Look at all this. Look at all
Right.
this space you see here. This is not normal. You can't be running away from the mean that much, that fast. It's too fast.
Hmm.
It's too fast.
Now,
This is
this
too
is
much.
that. So, is that driven, Roger? I think flight to safety is that probably
Yes.
one of the movers. As you said, it doesn't really matter what the
and
cause is,
and
but flight
flight
to
out of
safety.
and
Yeah.
flight out of crypto
Yeah.
and flight out of crypto as well. Okay. And potential slowdown in the economy. I can
Yep.
give you a million reasons why, and none of them will make a difference to our trading. What will make a difference to our trading is that gold is deviating quite a bit from this area that I drew for you. And my areas tend to be really, really accurate. And I'm telling you that gold should be coming down to this level. Now, silver lining. Let's say gold does come down to this level. We're talking about erasing 4 days of gains, folks.
Yeah, yeah, big whoop. Yep.
We're not talking about like notice I didn't say gold is going to crash, gold is going to burn, gold is going to self-destruct. All I'm saying is that gold needs to take a little pause. That's all. So this is very normal. So if you're currently long gold stocks, there's no reason to panic. There's no reason to sell off. There's nothing going on except a really healthy correction. And by the way, once gold comes down to this level, I'm not throwing out gold with the baby. I'm not throwing out the baby with the bathwater. Gold
Hmm.
may take it may continue going up,
Hmm. And there's
but
two
I will.
strategies here, Roger. I know you talk about physical gold versus gold stocks.
Gold stocks are a different animal. They don't have a
Yeah.
direct market timing, but if gold really starts falling, and this is not a real fall, but if gold really starts falling, they will also fall because obviously it'll impact the price of gold.
Hmm.
Yeah, and everything I just said about gold will also apply to silver. Okay, to a great. I don't want to get into like a long commodity analysis, but I think you guys understand exactly what I'm looking for. I'm looking for this to come back down right here, as I've been saying for a very long time. It's way too far away. Another one last thing: the size of these candles is also bothering me because of the size of these candles. And I'm going to show you something else here. Let me show you something I teach you guys all the time. I teach you this all the time. Let me show you the same thing I've been saying in a different way. Remember Bollinger Width? How I teach you how far away it's from the mean?
Yeah.
Look what the mean here on Bollinger is at 80, 100. Look at where we're at right now. This is the last time we got this far away. What happened?
And boom.
What do you
Retrace.
think is going to, what
Yep.
happened right here? What do you think is going to happen right here? You think it's just going to continue going up indefinitely? Look,
Mm-mm.
it's right there. Here's the mean, okay? Here. Just give you like a good example right there. Let's raise it up. Let's put it up at 100 and let's put it up all the way here because volatility has been increasing. So we want to cover all of these areas. You're
Okay.
going to this look 470 versus 114. Come on. Come on, guys. This is you if you weren't if look, I've only been saying if you're long gold, it's a good time to take profit.
Hmm.
Okay. All right. All right. I
Thank
think
you, Roger. Thank you.
yeah,
I'm
I think
glad you
we
could get that in because so many people were asking questions about it in light of what's happening in the markets.
yeah, yeah, of course, of course. All right, all right. So I'm not. I let's go back to this QQQ. So the QQQ's looking good. Again, we have the same problem here. We're look at where we're at here at this level. Are we going to
Hmm.
break or not? I don't know. Let's look at the SPY again. The SPY pulled off, went back to the 8-day, and looks like it. Let's see if it comes back up here and breaks this area. But again, we're at an area, and we're getting later in the day. Right now, ADD is negative 136. There's no basically we're like this right now. We're just like where we were yesterday. So there's just not a lot of rhythm to the market. Okay. All right. Let me open up a new can. When I talk, my mouth gets really
Of
dry.
course it does,
Yeah,
Roger.
it gets really dry. Um, okay. So I want to give you guys some stocks. I want to give you guys some stocks. And let me move that here. Let me move that here. I want to give you some stocks and options that I'm looking at. We haven't done this in a long time. So let's do it. Let's have a little fun with that. I'll leave the date. I'll leave the primarily focus on here. If I see something really exciting, then we move on to here. Okay. But this is just day trading mode. This is swing trading mode. Okay.
Okay.
All right. This is the short side. Okay. Reddit. Look at this clean trend. Very clean trend. The only caveat is we're getting close to the 100-day moving average. So you've got maybe 10 points here, maybe 7 points, but those are good 7 points. And notice the overextended area lines up perfectly down almost to a tick with the 100-day moving average. Look at that. You see that?
Hmm.
Look at that. Look at the red line and look at the white line.
Yeah.
I
Converged.
nerd out over this kind of stuff all day, all day kind of. This is the stuff that gets me excited,
And me
Because
is like, whatever.
look, folks. See, we're in this channel. We've been in this channel, and you see how we're finally breaking down, and we're not overextended from the 8-day EMA yet. Okay. Okay. Um, Now, what kind of option would I do right now if I wanted to do a position on? Because I really like Reddit right now. So what would I do? Well, to be honest with you, because the market's really volatile right now, buying a put probably is a bad idea. Okay. But offsetting that put with a debit spread may be a great idea because options are over expensive. So I would do one of two things. I don't think I'd do a credit spread um, because I actually think that there's some downside potential here. Usually I'll do a credit spread when I think there's very little downside or upside potential. Just a hair. Here, I think this thing can actually go down to a whole, this thing can go down. Because look where we are in the chain of events. We haven't even got to the gap yet, you know? Basically, what I think is this can consolidate and continue going lower. So I would probably go 14 days out and do a debit spread. How would I do a debit spread? Well, I would buy an option that's near 0.50 delta right here or right here. Look at the price, how expensive they are. They're overinflated, which is what you want. So this is not a good price. This is more of an actual price, $2. But what you would do here is You'd probably buy the 195 or 192.50, and then you would sell the 190 or 187.50 against it. And you would make sure that whatever you're paying for that spread is at the most 50% of the spread between the strike prices. Okay. Very, 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 very simple. Very simple. Would I do a credit spread here? Probably not. I really like this stock this is a pretty fast moving stock. I don't think I'd want that. Okay. Because you see, with a debit spread, because the out of the money options are so overinflated, the implied volatility on the option that we bought would decay slower than the implied volatility on the option that we sold. See how we're still talking about implied volatility, which means price would start moving quicker on the option to our advantage on the option that we sold. So even if the stock doesn't go anywhere, we would start making money. On a credit spread, it would work the other way around. Okay? Really important. Okay. But what you need to know is I would go 14 days out. Now, well, Roger, what if you were just buying a put? Different story. I would go about 35 days out and I would go deep in the money, but look how much I would spend. I would spend almost $40 versus spending $1.25, which is the most I would spend in the scenario that we're talking about, or maybe $2.50. Now, most folks can afford $1.25 or $2.50. They can't do, so. All right. Remember, implied volatility is really high across the board, Sean. Across the board. If we're buying and selling, that 131 is also the one that we're selling. That's why debit spread would work, because you're also selling high implied volatility. Okay, BMY. That's a nice trade, but I wouldn't be day trading this. I would be swing trading this. So I would go, and this doesn't really have high implied volatility. So I would probably go about 28 days out. It's not expensive. I would go 68.72 delta or 78 delta right here. Now notice I didn't start with the strike prices. I started with right here. Started right here with the delta. And that's what I would be starting with here. Okay. RCL. Look at this nice clean trend. Definitely not a day trade, definitely a swing. Let's see what happens if we go far out. We go 20 days out, 0.71. It's pretty expensive, right? So let's see if we can go closer. 14 days out. We'll start here at 300. We'll buy the 300 and we'll sell the 297.50 or the 295. Here we want to pay $1.50 and here we want to pay $2.50. Okay, I gave you both scenarios, okay? Upstart. Let's look at Upstart real quick. Nice stock. Look. You got a nice compression, right? And you have a nice compression break. Is it overextended from the 8-day? No, it's not. You guys understanding what I'm looking? And by the way, remember we put that into data miner too, so it's not too overextended from the 8-day EMA, right, Matt?
That's right.
That's right. I wanted to see if he was asleep at the wheel.
I'm not.
I know you're not. I'm just giving you a hard time. All right. Let's see these options. Let's see. I think the stock split a little while back. All right. We can go about 20. No, actually 35 days has more liquidity. Right here, 52.50 put, almost $10. That's a quarter of the price of the stock, or 20% of the price of the stock. Probably don't want to do that. So I'd probably go 14 days out, go 47.50, right? Go to Halloween, go 47.50, buy the 47.50 and sell the 46 or 40. How about this? We buy I wasn't expecting it to go into halves. So we buy the 47 and we sell the 46, and we could do this for 50 cents. Okay? For 50 cents. Yes, you can. Yes, you can. Or you can do this if you really want to be frisky. although I probably wouldn't do this, but you can buy the 47.50 and sell the 47 for a quarter. Yes, a quarter. A quarter. A quarter. Okay, let's continue. See how there's different ways to skin a cat? Now this is a beautiful A line to the downside. The only thing I wouldn't day trade it right now because look, a lot of support here at these levels, right? A lot of support at these levels. You guys can see this, right?
Yep,
We're all
absolutely.
seeing the, yeah,
Yep.
we're all seeing, I just want to make sure we're all seeing the same thing. And basic materials are really weak today. Nice A line. How would I trade this? Well, there's only monthly options. 35 days is perfect though. So if I'm going to go out a month, I'm going to just buy a put. Now, these options are not that overextended. I can go 88. I can get $3.60 intrinsic value and pay like $5. That's a great deal. I would just go in the money 87 and do this right here. I wouldn't even think twice. That's a nice, and it doesn't get overextended till we're like right here or right there. So you've got some more. How are you guys liking these stocks? Joe, that's because Matt hasn't put all the tickers in. Right now, it just has S&P 500. He's got to put in another 400 tickers. We'll get to it next week. Matt, make a note for yourself. Notice as soon as I started saying Matt, he turns off the camera. He knows I'm coming for him. Make a note for yourself when your disease when your diseased body gets better. You fix that, okay?
Hmm.
All right.
Diseased body. Matt, did you come back from the Congo or something like that?
Cyrus, I'm not going that far. I'm actually going pretty close, just depending on what I'm doing. And if I am going far, I'm going far deep in the money.
Hmm.
All right. All right. KMX. See this? How we got this little area here, compression. See how it's breaking down? It's below, nothing to the left of us. That's what we like. So, oh, only monthly options. All right. 75 delta right here. See, all I looked at is the delta. Didn't have to go. I don't look at strikes. I look at deltas. Deltas, deltas, deltas. And by the way, this option, see Cyrus, look. So to answer your question, Cyrus, why am I going so far with this volatility? That's why I'm going deep in the, this is, see, the only portion of this option that's going to be subject to implied volatility is the portion that's out of the money. We are intrinsically at $7.21 at this moment. I'm going to pay for this option $7.50. That's actually what I'm going to pay. So I'm going to be taxed for implied volatility on 30 cents. It's not even worth talking about. I'm literally buying the underlying here. So this is not bad. So no, I wouldn't be going 35 days out and buying a 33 delta, but I'm buying a 75. I'm literally 75% of the stock price is going to be reflected in these options. So I'm okay with that. I'm very comfortable with that. Actually, Jen. Look at this. Okay, guys, what do you think this thing is going to continue doing? It's going to miraculously turn around? Probably going to continue going down. That's the kind of stocks you want. You want stocks where you're not second guessing too much.
Right.
If you have to figure out which way the stock is going, don't trade it. All right. Only monthly options available, 88 delta, $1.48 intrinsic value. I'm probably going to end up paying about $1. I don't mind this at all. I don't mind doing that at all. That's a great deal. Heck, to be honest with you, I may even go right here. 248, get a 97 delta and pay 270, 240. I'm talking about I'm paying literally, Cyrus, I'm paying for this option 20 cents. 20 cents for this option. If I get it at 260, because you got intrinsic value of $2.50. All of the ones I showed you are, I think, are going to move. So I would actually do the other way around. Folks, remember, these are stocks that can't hold up when the market is within a few striking points of the all-time high. By the way, let me check on the SPY. Actually, let me do one more and check on the SPY because this will be the last short. In a channel, See the channel? What happens? Anything to the left of us? No. Do we practice what we preached? Now you see what I mean? Good, 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 good. Yeah, anytime you have a question, Cyrus, just ask. I mean, see, oh, nice tight spread too. 35 days out, 97 delta. Look at this intrinsic value of 160. To be honest with you, these options are not that expensive if you go into intrinsic value. They're not that bad. You're not paying all that much. So $12.50. I mean, it's not bad. Not bad at all. Let's go to the long side. Hey, Jeffrey, how are you?
Hey, doing all right. Roger, good to see you. And
Good to
Matt
see you
and
too.
Raleigh.
Hey, Jeffrey.
Good to see everybody. Good to see everybody here. How's the market been treating you?
Well, just another day in paradise. I mean, it's all in the expected, what I expected. I mean, we went frothy and you expect a pullback, and then all week we just been inside last week's pullback. So, I mean, just a
Yeah.
more normal market action. This is more normal than what we've had for seems like 2 years.
I don't know. Maybe, maybe not. It's a little. I think it's a lot of it is news driven right now, but we're definitely starting to definitely
Yeah, we
starting
got
to move in the
some
right direction.
we got some credit cracks showing up, and
Yeah,
that's the thing that's happening. That I don't know if the mainstream media is talking about it or not, but that's really what's driving the last couple of days.
that is what's
Is
driving. And as you know, credit is what caused the last several market downturns. So
Yep.
i- it's very uh, credit causes fear, whether rational or irrational. Credit causes fear. It
And what's
does.
funny is the Tricolor bankruptcy happened almost a month ago or over a month ago, and right now we're just seeing the fallout of it with
Yeah,
banks actually having to admit that they took a loss. They were sitting there going, is there any way to paper this over? Any way
yeah.
to, sweep this under the rug? And it's like, nope, we're gonna have to tell everybody. And the rubber meets the road. Luckily, there's not been any huge hiccups yet, like Silicon Valley Bank back in 2023. But
Exactly. Exactly.
um, but that's
Yeah.
is this the warning sign? I mean, we still haven't dealt with the 1.6 trillion dollars in commercial real estate that needs to be rewritten. All those loans are coming due, and everybody's just kicking the can. Maybe we can give them 6 more weeks. Maybe Trump will get that interest rate down, and
And it
eventually
doesn't
we're
look
gonna have
like,
to. Eventually, we're gonna have to do something.
yeah. Yeah. No, no, I couldn't agree with you more. I couldn't agree with you more. We really have a lot of stuff. And also the government shutdown doesn't help. What are we now going into our third week, or am I mistaken? The third
It's
week?
either 17 or 18th day, so we're getting close to 3 weeks.
It's getting
And
close to three. Yeah, we're getting close to 3 weeks. So this is not. How long was the last one? Do you guys remember? Anybody remember how long the last shutdown
and the
was? It
I
border
think it
like,
was
wall
about
one.
3 weeks or so,
yeah,
is what I
yeah,
seem to recall. It was about
yeah,
that.
something about 30. Oh, ooh, really?
Ooh,
Wow.
35
Whew.
days. Okay,
Wow.
there
I
you
guess it
go.
was longer than we expected. All right.
Yeah,
So let me, I
I
do
was gonna
want
say
to, I do want to,
the
yeah.
betting markets are predicting 40 days right now. So
Say that. Can you repeat what you said?
yeah, Kalshi's a betting market.
Yeah. Yeah.
They're actually predicting 40 days right now on average is the average
40.
bet.
That's what I didn't hear. I didn't hear the number of
Four,
days. Okay.
four,
40.
40, and it's been
Yeah. 40
climbing
days.
every single day.
Not good. Not good. And VIX is still above 20, folks. Remember what I said. VIX above 20 is like, you it's Clyde on high alert. You guys remember Clyde on high alert. Clyde is my cat, Jeffrey. He stands up on
Yeah,
both of his.
yeah, I've seen it
You've
before. You
you've
showed
seen
it
him
to me.
around. You've seen him a few times. Yeah, you've seen Clyde a few times. So just beware, folks. We have to be lower your position size, lower your exposure, think defensively till volatility cools off a little bit. It's for the best, or just take very short term trades. Now let me go through my long list. I'm not going to do the options. Maybe I'll do it quickly. We still have a little time, and then I want to talk a little bit about what Jeffrey's going to be talking. What Jeffrey and I are going to be talking about at 1 o'clock.
I
So
always find it fascinating to come on here and talk to you, Roger. So you just do
I
your
appreciate it.
show, and we'll get to my stuff whenever.
Thanks. Thank you. Thank you. So CVS, I still like CVS quite a bit. I mean, it's getting a little it's not overextended, but I would prefer to buy it here. And I did give you guys heads up on it about there. Let me just switch to calls. I don't think I would be now for CVS. I probably would be doing a credit spread versus a debit spread right here. Okay, I'll just tell you. I'll identify what I would rather do.
This is a heck of
SanDisk.
a turnaround story on CVS too. Just
It is. I never expected it to be. I thought they were.
Toast.
I really did. I wasn't
Mhm.
expecting. I wasn't expecting that. Here's one, Matt. You may want to make a note of this. Actually, don't we have this stock, Matt, in one of our portfolios? Are you there, Matt?
No, I don't think so.
No? Okay. Well, if we don't, look how well it's respecting the 8-day. And I know you like to buy stocks that are coming down to the 8-day. Options are too wide. Forget it. And earnings. All right. Well, but I do like the stock. I do like the stock. As long as now, also, you're pretty close to the 15-day here. So you don't have to put too much at risk. SIG Jewelers. I like this stock. I like this breakout. I like how it's holding on, and I like how it's still not overextended from the 8-day. So I do like this stock. I think it's going to build a consolidation, maybe come to the 8-day. So you probably want to wait. You're not going to miss out on anything here. Earnings are not for a while. General Motors. General Motors is giving us a potential A line, which I like. Matt, make a note of this. Options are always nice and tight on General Motors. Not right now. Right now, everything is very because of implied volatility, but generally speaking, they're very clean.
Mhm.
And we may be coming up a little bit more. Whether you put the VWAP here or here, you're still above it. As long as we close above this area right here, I do like General Motors. Um, we do have earnings in 4 days, so this would be a very short term pit type of like a overnight, or I basically call them day trades, but they're short term swings. And I would just buy an option. I would probably go about 7 days out, and I'd buy something close to the money, so there's hardly any outside value of it. Anyways, let's continue. WDC. WDC is nice. We're holding above the 8-day EMA. It's a nice stock considering most tech is closer to the 50-day right now. This is looking pretty good. I like how this is turning around and coming back up. I would not do a credit spread here. I would do a debit or long, an individual option. TJ Maxx, I like TJ Maxx it's also an A line. It's very nice. It's just respecting the 8-day and the 15, moving in a nice upward slope. Definitely not overextended. I would consider putting this in one of our portfolios. Matt, do we have TJ Maxx?
We do.
Well, there you have it. We already have it somewhere. So yeah, we got into it yesterday. So you see this pattern right here, how it comes down to the 15-day. This is what I was. So what we saw yesterday, what got us into TJ Maxx is I'm just trying to connect the dots for you guys. Is what I'm seeing right now in SDNK. See how SDNK is coming down, but it's still strong in terms of the trajectory. And now look at TJ Maxx. We got into it yesterday, right before the close, as it was bouncing off of this level right here. So as long as the stock is still above this area and it's not doesn't have like crazy volume going down or anything like that, you could use them to buy. So so what I'm trying to say is SNDK looks exact or similar to how TJ Maxx looked when we got into it yesterday. That's all I'm trying to say. American Express. I like American Express. I actually went long, personally, American Express for a scalp this morning. Made a little money. It was too fast to report. If it comes back to the VWAP, I'll give it to you guys. As a matter of fact, I might have set an alert. Let's see. Yeah, right there. It's the only one that hasn't passed. So I'm kind of waiting to give it to you guys if it comes back down here, if I still feel it's worthy. But I wouldn't be buying it up here. I would wait for a pullback, but it's a nice day trade. And this would be a day trade. INCY, nice smooth coming up here. It's a little choppy, but I'm liking what I'm seeing, and I liked how it violated the area yesterday. Now how it came back to the 8-day. Looks pretty good here. You got earnings coming up day before my birthday. ENSG. Oh, that is beautiful. That is a quality looking stock. It's a very nice looking trend. I like how it's respecting the 8-day EMA. Problem is you're going to be screwed on the options here. They're pretty wide. So you're not really going to get a lot off here. And last but not least, Guild. It's a little overextended. I'm going to add a little alert, set alert to the at the VWAP here, but I wouldn't mind doing it as a day trade if it comes back and bounces at the VWAP. And I like these patterns where it opens up, it consolidates right at the VWAP, and then it takes off, and then it comes down to the VWAP. You usually have a nice bounce. I know Richard, for example, he likes to put 20% limit orders right after he enters right here and just catches them on the way back up. Ruth, we don't talk about existing trades that we have in members areas in the public channel that is free to everybody here. If you have a question about it, you're more than welcome to look at the Telegram channel in the pit, or because I update you on that all day long, or send me an email, roger@rogerscott.com. All right. I just want to be fair to people and not give them premium information. All right. That's what I have to say about that. Now, let me unshare my screen here real quick. Let me come back here. If you guys have any questions about anything that I just discussed, this would be a fantastic time. This would be a fantastic time to ask me those questions.
I got a question for you, Roger.
Yes, please.
What's that shirt say?
It says, I'm glad you asked. It says, candlesticks. It's all I think about.
Yeah, great.
I like it. I like it.
All right. Why don't you share your screen, Jeffrey? Why
Yeah.
don't you share we'll use your screen today. Usually we use my screen, but we'll use your screen today.
I got a little preview anyway. We can just kind of a
Please.
little warm up to what I brought.
I love that. Let's do it.
Yeah, I was on here last week and just kind of teased out this new thing that Jack and I were launching last week. And I've gotten a lot of questions about what does this thing actually do? Like, what does it actually do? Even from people that have seen the presentation. And so I just kind of simplified it really quickly here. It watches the charts for my signature technical pattern. It identifies a bullish entry setup. Then it searches for an ideal option by loading up the Alpaca brokerage account. And then it gets live pricing by creating a live Alpaca brokerage account order in the market. And it sends a clear, plain text, actionable trade alert out to everybody when the trade is ready to go. That's what it does in a nutshell.
Does it wash dishes?
I wish we're not quite there yet.
I mean, a better question is, what does it not do?
Yeah. Well, I mean, it doesn't actually place the trade for you. That's
right.
No,
we're not quite there yet.
I'm out of here.
But it does. It looks for my signature technical pattern, which looks just like this. I have a set of EMAs that I love that act as support resistance, and it watches every single candle. I forget to look at the charts, every single candle. I love candlesticks, and that's what I do all day. But I get on here, I get on webinars, I go talk to people, I provide, market content, and what I can't do is look at every single ticker, every single new candle, especially on lower time frames. But this thing can, that I built. And when it finds the entry, it's ready to go. And it goes and pulls up an option chain and looks at, oh my gosh, which options do we trade? That's a lot of people. I've built algorithms in the past, and the one I launched last year, tells you that the signature pattern is ready to go, but you have to go make the decision. What's the best way to trade it? Well, I took feedback and took a lot of time and effort, and I created an algorithm that goes and loads up a brokerage account, pulls live market prices, does real market analysis to figure out where the best trade is, packs it up, and gives it to you in clear, plain text what to do. It says sell this option, buy this option, get a net credit here. These are credit spread trades. It does up the win rate. I took my 100% win rate strategy and blended it with my day trade strategy and had the baby that is cash bot. And that's what this thing does right here into a high probability trade. And if you want to risk $1,000 in each contract or each trade, it tells you how many contracts to do, all right there. So you really don't have to even go look at a chart. And this is kind of a take you fishing with me type of trade. You don't have to dive in and really get into the nitty gritty of it all. You just kind of have to follow instructions. And say this week, it's a fast moving market and price isn't within 5 cents of this. When you look at it, just skip it. There'll be another one. There's on average, we've had 7 trades a day or 7 trades a week, excuse me, 7 trades a week, all week, every week this year so far. So there's going to be more trades. So if you miss one, don't sweat it. There's going to be more coming. And it's just a highly repeatable thing. And in fact, this one, I didn't get the full credit. When I got into the trade, I got a little bit less because I don't front run clients. That's kind of a no-no in our business, Roger. And then I set up the exit for half of my credit. And for this one in particular, this was the entry. I got out right over here, and price actually took a diversion, a dropped in between. If I had just bought 0 days, I probably would have taken a loss on that. But because I had gone out 1 day and took the optimal suggestion of the bot, it actually turned into a winner. I booked it out right there, 12:43 on the 14th. It turned into a pretty nice trade. So that's what I've kind of brought to show off in more detail with you today. But this is the high level. What is it doing in the background? The nerdy stuff that didn't make it into the presentation.
I love this. Let's why don't we do